While Metair posted a 16% drop in first half headline earnings per share to 120 cents. Theo Loock, MD of Metair, joins us now to unpack the numbers further. Good to have you with us.
Thank you very much.
I take it the big news story is obviously the refinancing of the credit facility, 1.4 billion rand with regard to the acquisition you did in Turkey. Why is that refinancing necessary?
I think, due to time pressures at the end of last year and the confidentiality of the acquisition, we had to act on the resources that we had. So we managed to get a bridge facility from ABSA, our bankers, and we went to the market to issue 50% of the acquisition cost in capital. And then we executed the acquisition. Now that we've completed the acquisition, we were able to go to the market and go through a formal refinancing process. And at 69% of prime, on a pref share, a redeemable pref share, a capital raise, the market supports our expansion strategy, especially our emerging market battery expansion strategy, and we're very pleased with it.
It's interesting that you selected Turkey, and we've had this conversation before, but many South Africa at all?
No, I don't think so. It's part of our strategy that we say we like this time zone plus 2 hours, minus 2 hours. There's an opportunity for some investments in traditionally family-owned businesses, and it's a very strong market, especially the vehicle manufacturing market. What drove us to Turkey is that the market is 2 times plus the size of the South African vehicle market manufacturing, very strong aftermarket, almost 20 million vehicles, and a very strong export position. That makes us the number 3 battery player in the EMEA market, and that's why we're so pleased with the result from Mutlu. 500% improvement on its first half result to the comparative period as we turn it from a family-owned business to a corporate entity.
Locally, though, your margins are under pressure in this 6-month period. Significant pressure if you have a look at the operating level. What's going on?
Labour instability. One thing, the premise that the South African automotive industry is built on, especially in the OE manufacturing side, is that we want stable production environment. We run a pool system where the market is buffered with stocks. That gives us a stable manufacturing environment. As soon as you start varying the input, and especially labour availability, what happens, your planning goes out the window, and therefore margin pressure. So what it does, and especially in anticipation of strikes, customers don't like to be on the back foot all the time, so they do mitigation actions. Those mitigation actions is building of stock, trying to put contingency plans in place, and also catchback plans. So both before and after a strike period, you're either trying to build stock, or you're trying to catch back.
Did you see President Zuma signed into law yesterday?
Yes.
Yeah, Labour Relations Act. Is that going to help the situation?
Everything that comes with regulation and structure helps. If it's in abeyance or still being discussed, in uncertainty, people don't know what side of the coin it's going to fall. We are law-abiding citizens, so if that's the law, we manage to work with it, and we're very happy with it.
But obviously the South African environment, like you make mention of, is a difficult one. Labour is one aspect. Are there any other concerns with regard to operations here?
I think we're very fortunate. The labour could have had a much more negative effect. If you take pre-Marikana, the number of vehicles in South Africa produced is actually less than it is today. And that's because of our government support system, the Automotive Production and Development Program. It's really buffered some of the hard negative effect that labour could have had on the South African motor vehicle manufacturing in mind, to the extent that the vehicle production is now could lift in 2016-17 to 650, 700,000 vehicles, and later we've seen new entrants coming to the market. The announcement, for instance, of Hyundai coming to produce in South Africa is very positive news. So yes, there's negative news. Labour instability is bad. It does destabilise our manufacturing environment. It does affect operating profit. The positive portion of that is government's given an overlay that provided structure and future to the business. So we can just get back to stabilised labour environment. We should have a bright future.
Sounds to me like government is subsidising this industry. We know that for a fact. But you got labour instability on the one hand, but you guys are okay because government's pumping money in there. That doesn't sound fair to other manufacturers.
We're not okay. You see a redistribution in the margins that happened because of the instability. And what the government is doing is not subsidizing the industry, it's protecting the industry by import duties. You go everywhere else in the world, we've got some of the lowest import duties on vehicles over the world. In Turkey, for instance, where we operate, there's 135% import duty on luxury vehicles. In South Africa today, we may be a net with free trade agreement sits on import duties that's less than 15%, and with the rebates that you can earn through the APDP actually comes to a zero protection. So all it is trying to protect a very important engineering and manufacturing industry in South Africa. It's not subsidized at all.
But why are car prices double those of anywhere else in the world?
I don't think the car prices is necessarily
I'll give you the numbers.
Double, yeah.
I'll show you the numbers. They are much, much higher than elsewhere in the world. Why? MIDP is part of it.
Now, if you look at it's vehicle demand and supply. Let's look at the transport code, what's produced in South Africa, and I think we've got very competitive prices. If you look at the entry-level vehicles, today more than 65 or 70% of the vehicles that's sold in South Africa has been imported into South Africa. Where we do is we earn foreign currency by exporting high-value vehicles because we're competitive in those emerging markets, and structural support like AGOA Act from America that sees our vehicles exported from South Africa into the US with no duties is giving support to the manufacturing industry in South Africa. So it's not necessarily coming from out of the taxpayer's pocket.
This support, does this mean that this industry as a whole isn't necessarily dying? Because so often we hear about statistics about potential job losses within the manufacturing sector. PMI is slightly lower than what it was previously.
We're fortunate, you know, manufacturing as a sector has come from, say, 22% contribution of GDP down to maybe 14, 15, but the automotive manufacturing industry is 50% of that, 7%. And it's because of the very strong export markets that we support. More than 50% of the vehicles produced in South Africa is exported. Some vehicle manufacturers export 90% of their vehicles in South Africa. And everywhere in the world there's the phenomenon that vehicle manufacturing enjoys some sort of support. Mostly it's demand support in markets where they protect it from import duties, and South Africa has got the lowest. I think we're one of the most competitive. If you look at the number of vehicles that you can buy in the South African market, has come to about, I think, 1,800 derivatives and model types that you can buy in the South African market.
Doesn't that tell you something? For a small market to have 1,800 options sounds like it's somewhat overtraded. For Hyundai to come and put another plant here, how many motor manufacturers do we now have?
That will be the seventh one. There's 7 in South
For a
Africa.
little country, 0.3% of global GDP,
Yeah.
7 motor manufacturers. Any other country in the world that's in a similar situation at a similar size?
It's very important aspect that you mustn't miss is the commodity that goes into the vehicle. A vehicle consists of aluminium, copper, steel, lead, and commodities cannot be transported all over the world. So it's about the availability of the commodity in the country that can be converted into the component that goes into the vehicle. Because we've got the commodity that's available, still got relatively good electricity rates, maybe some improvement coming in the future. Plus we have competitive, if we have a stable labor environment, we have a competitive manufacturing environment. But we need to stabilize the manufacturing environment.
We better hope that BHP do not pull out then from Hillside, because then we will not have aluminium and we'd have to import that as well.
Yeah, and that's what's important, beneficiation, and I think that's where the government has been very clever. If you look at the focus of the Industrial Policy Action Plan, it focuses on beneficiation of raw materials in South Africa.
Interesting. Interesting discussion. Thanks, Theo, for unpacking that from your perspective.